Hollande and the euro. What are investors wanting to hear from him, and what impact is it going to have in the FX market?
Well, you know, over the last couple of years, there's been a lot of criticism directed at France for having been slow at implementing structural reform. Now, if we look back at the most recent data from France, the PMI's data, for instance, that came out at the start of this year, what we saw was for Europe in general, we saw better numbers. But for France, it really was an outlier, weaker data. And of course, a lot of people say, well, that's because France have been so slow in implementing structural reform. So this is what the market really wants to see from Hollande. There's a huge array of criticism in recent months that yes, Hollande has been good at foreign policy, but not too good at domestic policy, and this is what France needs to do. So that's what the market is hoping for. But of course, you know, France will still be accused of being slow in the reform process, even if he does surprise us with extra reforms today.
Yeah, and in the meantime, euro pretty well supported. Let's move on to the yen. Is it oversold? Do we need to see some sort of hefty correction before we move on?
Well, see, that's quite an interesting question, because clearly the market is all very much positioned one way, or it certainly was in the run-up to last year. The market was certainly, you know, very, very short the yen, and this expectation that there could be even more Bank of Japan stimulus ahead of the consumption tax hike in April. It really does seem to really was undermining the yen. But yes, perhaps we are a little bit oversold. Perhaps we need to have this pullback. And of course, there is this perception that the yen is correlated with the Nikkei. Yesterday we saw the Nikkei down 3%, or this morning I should say, down 3%, and of course that then drags dollar yen down too. So it is possible that we need this flat corrective period, but I do think by the end of the year dollar yen will probably still be higher.
Quick word on sterling as well. A raft of inflation data out of the UK today. Is the market too optimistic? Can we expect it to rein in its expectations now?
I think if you look at the expectations for the UK data over the last few weeks, yes, I think the market has been too optimistic. The data has disappointed, but the data hasn't been bad. The data's carrying on being decent. I think the market's just seen months and months of better than expected UK data, and perhaps got a little bit ahead of itself in pricing too much good news in. And there's been a reining back over these last few weeks, and we've seen that a little bit in money market rates too. I think the market is less optimistic now about a rate hike from the Bank of England this year, which I think is right. I don't think there will be a rate hike this year, and I think as we move in the next few weeks, we'll get the minutes of the Bank of England policy meeting. I think they will be dovish. I think we'll get the inflation report. I think that will be dovish, and I think that will keep sterling on the back foot for now.